So thank you very much for coming, and why don't we get started?
Sure. So I'm going to get us started since we got the technology set up, so we got to use it while we have it.
I was having a little bit of trouble with the microphone, but we're good now.
You good?
Yeah, just, I don't know why the PowerPoint's not coming up. Sorry, guys. If you want to start, I can get it.
Okay. Sure. So I'm Howard Kelly. As they said, I'm an architect locally. I actually was with a large firm in New Canaan, working on projects all over the country and locally and in Westchester County. And I've just started my own practice. So I'm happy to meet all of you. I'm happy to help you with anything, whether it's large or small. If you have a question, you just want to consult with me, no problem. Take my contact and let me know. I've worked in Greenwich, Stamford, Darien, New Canaan, Rye, and throughout Westchester County. So,
Don't forget Florida.
And Florida and Denver, Aspen and Bermuda. But I don't know if you guys represent Bermuda yet, but when you get there, let me know.
Did you want the female one?
Yeah, I can. Well, yeah, sure. I can do it this way.
Okay.
All right, great.
Just whatever you want me to do.
Yeah, so I'll just kind of point at you maybe.
Okay.
All right. So if you want to go back to the beginning. So this is basically a primer on how to help somebody if you're the realtor with a coastal property. So there's actually not a ton of differences between the coastal property and any other property you might sell. So there's still zoning requirements. There's still going to be the building department. There's still going to be wetlands and things like that. So what I tried to do is I tried to say, how could I help you guys and empower you a little bit when someone comes to you and says, I want to sell my house, what can I do with it? What information can you guys find just on your own before you need to consult with an architect or an attorney? Because your two kind of resources would probably be an architect or an attorney to help you interpret the codes and everything that goes behind it. So just a quick overview. We all know FEMA, I think. FEMA is actually part of the Department of Homeland Security now. It's the Federal Emergency Management Agency. You'll hear FEMA, that word referenced a lot when it comes to flooding, obviously, right? FEMA is the one deciding where the floodplains are, which houses are vulnerable in a hurricane or another type of event. But what most people don't realize is that of the three tiers, FEMA, which is federal, the state, and the towns are actually the ones that enforce all of the requirements. So FEMA is generating these major guidelines. The town is really the one who comes and inspects, who writes the codes or the regulations that underpin it. So we really have to study it town by town. Now, most of the towns in Connecticut operate in the same way. So the information I'm giving you is specifically for Greenwich, but it's probably very similar or almost the same for other towns locally. So as I said earlier, really what we're focused on today are just the top 2 bullet points. So I won't bore you too much. Just flood hazard and coastal area management. The rest of the stuff is really what you would encounter anywhere. So you can go on the Greenwich zoning map and look up the zone of your coastal property. If it's the residential zone requiring 1 acre, that would be the same as if it was off a Round Hill Road up in North Greenwich. It's the same zones that are used. So how does all this filter down to the town of Greenwich? So starting at FEMA. FEMA creates the flood insurance rate maps, which I'm sure we'll hear about from the bank as well and from the insurers. The flood insurance rate map, or FIRM, determines what flood zone you're in. So it determines how bad, when that Hurricane Sandy or Irene comes, how badly will your home be impacted. The towns then implement the regulations. So if you really want to have fun one day, you can go to Greenwich Municipal Code Section 6, 139.1, and read it. It's titled Flood Hazard Overlay Zone, but I think I boiled it down for you, so you might just want the presentation. So I started here because we all know this. This is where we are right now, 279 Sound Beach Avenue in Old Greenwich. So you can kind of see that scary blue. That's the flood zone. So this building is in a flood zone. So what I'm going to do is I'm going to kind of walk you through, and what's handy is that where you're located happens to have all the flood zones on the same map. So we're going to use that as our basis. So who decided what that blue outline was? So the basis of how FEMA works is called a 100-year flood. What does a 100-year flood mean? It means it's expected statistically that once every 100 years, those areas will flood from a major storm, whether it's a nor'easter, a hurricane, or what we're getting later today, we'll see. But what that really means is it's a 1% chance, right? So you can look at statistics any way you want. It's either 1 in 100 years or a 1% chance. But what you really can't do is you can't use it to say, well, we just had a storm, so therefore it's 100 years till the next storm. That's really not what it means. And I put stars there because we've all lived through 200-year events in the past 10 years, which are Irene and Sandy, right? So there were homes, especially like down in Norwalk, which is very low compared to Greenwich, where they were destroyed twice in a row in those 2 storms. So you can't look at someone and say, well, we just had one, now we're good until 2120 or whatever. So that's called a base flood. It's sort of the statistical flood that is used to drive all of these requirements. It drives what's called the other keyword, base flood elevation. You've probably heard that many times. The base flood elevation is a number that FEMA came up with that says this is the highest when those waves come in and the tide comes in, the waves are crashing. What's the highest they get? So here in this building, they've determined that number is 13 feet above sea level. So in this building, they're saying when that flood comes in, 13 feet. Now this building might be at 9 feet above sea level, it might be at 18 feet, it might be at 6 feet. But whatever it is, that's the height of the water. So there it is again. So now we're here, which is good. No, it's on purpose, don't worry.
Okay.
So what it shows here is that in our area where Sound Beach Avenue is, it's 13 feet, but as you go out more towards the water, in the actual cove, it's 15 feet. So those buildings would have to be higher to meet FEMA codes. The gray areas are not in a floodplain, right? So there's actually a section here off of Hendry Drive that is higher. It's actually higher than 15 feet. So those properties would not need flood insurance, technically. You may want flood insurance. I'm sure you guys can advise on that. And then the blue lines, as we said, indicate the floodplain.
It's the structure. It needs the insurance, not the property.
Correct.
That's where the structure is.
Is where the structure is, right? So we'll get into that. Some lots, you could have a huge lot. It really matters where your structure is, not the size of your lot. So we're going to come back to this image 2 or 3 times, and it's on your handout. But my goal by the end is that you know how to read this image. It's actually really handy. The government took a very complicated thing and made it simple, which is unusual. But we have really the 4 primary zones that you're going to encounter if you look at a flood map in Connecticut, all in one picture. So starting from the left side, you have what's called VE. V stands for velocity. What that means is the waves in that area will be moving very quickly. So think of it as what you traditionally see down in like South Carolina, where the house has to be raised up on stilts. There's nothing allowed below the floor line of the structure. You can maybe have some lattice work or something, but those buildings are seriously impacted by flooding regularly, right? So you see that scary blue line that's kind of sloping down. That's how those numbers are determined, right? When the storm approaches land, as the bottom of the ocean comes up, or the sound, the water kind of has to crest because it has nowhere to go. So it crests, and then it spreads out to the limits on that map, right? So this is showing it kind of spreading out. So if you're in a VE zone, your structure, you have the most engineering required, you have the most risk, and probably the highest flood insurance required. The next zone is in 2 parts. It's the AE zone. So A is just sort of, there's a tiers of zones, A through M, but really A is the one primarily used. Within the A zone, they've broken it into 2 pieces. One is where it's called coastal A, and that's where you may see waves between 1.5 and 3 feet high. In other words, pounding against your house are these waves. The rest of the AE zone is just regular AE, and that's less than 1.5. So the A zone is not as quote-unquote dangerous or risky as the VE zone, but recently they've added this tier within it because they're recommending in the coastal A zone, if you do a new house or if you do a substantial renovation, they're recommending that you follow those velocity, those VE guidelines. So we all know how things go, right? A recommendation that's not enforced comes out, and then probably within 10 years it's going to be a requirement. Or we can assume that the flood insurers will eventually get smart and say, guess what, you're in that zone, we want you to do it. Even if it's not an enforcement, we want you to follow those regulations. Then the AE zone, and then everybody else, the rest of us are an X. X just means you're probably not going to get flood, you're probably not going to you're not going to need insurance. That's the gray areas on the typical map. So this sort of just goes through what I described, so I won't spend too long here. I don't want to bore you. Some stuff you can read later, but that velocity zone is high hazard. We said significant wave action. We have to have open foundations. Greenwich, so this is the sort of the federal requirements. The bottom half is what Greenwich has applied for those regulations. So Greenwich says in the VE zone, if you build a new building, the bottom of your floor joist, so the bottom of the beams that carry the building, has to be 1 foot above the number. So we saw in the cove over here that it was 15. It was VE 15. That means that we need to add a foot, and now the bottom of our building needs to be at 16. So really, your first floor is at like 17.5, let's say.
Oh my gosh.
Wow.
So
That's high.
right.
Yeah.
So that's where you see, and you see
Bars
it.
on the windows.
Yes, you see it in like the Jersey Shore and places where people's houses were destroyed. You see house, houses, right? So, and one of the conflicts that has created that you might have guessed is zoning requires certain heights, right? Zoning says your building can't be 4 stories tall. It can only be 2.5 stories. It needs to be less than 40 feet. Well, that's in conflict with a code that's raising the floor height up. So a lot of towns are having to cope with that, and people are bringing variances and appeals because you're telling us to raise our building, but we have a limit up here. So our building is getting squished, right? So that's something that will play out over time. Fortunately for us, because of our topography, the shoreline, especially in Greenwich, is not really flat. It usually slopes up pretty quickly. So when we look at those maps later, you'll see that there's very minimal to few buildings actually in the VE zone. Most of them are in the AE zone.
Yes, good thing.
Good to know.
The AE zone is probably what's going to impact the most for if you're really looking at a property. So like this building, for example, less than 3 feet. So for here, you can have traditional foundations, right? If you built a new house in the AE zone, you could have your typical CMU or concrete poured wall. You just have to have what are called flood vents, and we'll see a picture later. It basically lets water pass through. So you can't really have finished space down there, but you can have a much less expensive foundation. So that's good to know for your owners. You're not forced to engineer some crazy stilts and all that kind of stuff. And then this is what I spoke about before. So this is that coastal AE zone. It was a recent ad, and they put a line on the map. They call it line of moderate wave action. That's not really important, but if you see it on a map, what it means is to the water side is where those higher waves are expected, and where it's recommended you follow the more stringent guideline, but not required. To the land side, you're totally fine to stay with the less stringent requirements. And then the X zone, we said, is just the gray areas that are not part of flooding. And the A zone is related to AE. This is something we'll see later, but you actually need to check if you're near a river. So for example, on the Miamis River, they also have flood zones. They've determined when the Miamis floods from spring storms, what it gets up to. And so sometimes they don't tell you what elevation. That usually happens when it's such a local thing that they expect the local government to know better. So in that case, they don't say, the federal government doesn't say what height they want you to put the building at. They say, refer to the local government. So AE means A with elevation, and plain A just means no elevation. So back to the picture. Pretty good, we can go ahead.
Okay.
Yep. So someone asked before, what about your lot versus your building, right? Many structures and many lots straddle different zones. So Greenwich and practically everybody say the most restrictive applies. So if you look on the map and you zoom, and your house is half in VE, half in AE, you're going with VE. You're going with the stringent. And Greenwich, because it's Greenwich, they like to specify very closely that the structure includes garages, sunrooms, and anything else attached to it. So you can't say, well, most of my house is here and it's just that little wing. They're going to say, we don't care. Either take the wing off the house, which no one wants to do, or comply with the code.
It would be cheaper to take the wing off.
Probably. Correct. Very good. See, we're going to get there. Good. So, what does this look like? So, I really had to go to South Carolina to find a good image of a house because, like I said, we don't have a ton of VE zone here, fortunately. So, it's what you're used to seeing down there, where the first floor is up a flight of stairs. All of this down here is basically just the stilts. They make it look pretty by filling in with these wood slat panels or lattice or mesh, something like that. But all of that stuff in between the piers is designed to bust away when a storm comes, right? Any dirt, like let's say your homeowner wants to put a nice pretty garden in the front, Any dirt has to also be able to wash away. It can't be structural. It has to wash away in a storm.
So do they use that for like storing kayaks? Like,
Sure,
what do
you
they-
can. People use it all the time. So if you go down to Long Island, if any of you have ever been to like West Hampton Beach, especially, that was rebuilt in the '90s after one of the hurricanes completely washed out the barrier island, kind of like happened with Sandy in Jersey. So all those houses actually comply with this. They're all raised. They all have. So people like kind of skip around the rules. Like they'll not really finish the lower level, but then they might throw some power down there after. I can't say this as an architect. They might, stays in the room, they might put some power in down there later and they might use it as a family room, but I can't control that. But people do stuff like that, but they know that if a storm comes, they're going to lose all of that, right? So you're not putting your valuable Maserati down there. You're going to try to, or hopefully you take it away for the storm, but yes. The only one locally I could find a picture of easily was actually in Fairfield Beach. Fairfield is probably one of the few truly low-lying areas other than Norwalk. So, like, I think this land might be 3 feet above sea level or something. So when that wave comes, it's spreading very far. So this house was done, and I took the picture because that shows what we said before. There's your old house that's on the ground, and there's the new house. Yeah.
Buy old house.
Yeah, right, exactly. Here's an example. This is currently on the market from Houlihan Lawrence. Sorry, I couldn't find one of your guys, but this is one that was renovated in 2013. So my guess, I don't know for sure, is that this part's the original house. So they picked it up. They either raised up the foundation or poured a new foundation, and then added wings to it, right? So this house now complies. Obviously, this side of the yard would flood because it's lower. So that's why that has the lattice work under there. So the water can pass through there. Another one on the market from Sotheby's, Bryan Road. So I put this here because it's an example of what this gentleman asked. If you see the red line on the left, it's kind of hard to see, but that's on the map where the VE zone starts. So even though we have VE zone, it's only your last 4 or 5 feet before the waterfront. So this whole structure is in the AE zone, and it would only have AE rules applied to it. This is what I described earlier, the vents, right? So what happens, this is a traditional foundation like any building that you would see throughout Connecticut, right? It's got a poured concrete wall. So this person wanted to keep the basement. They didn't want to change their whole structure. So to comply, what they have is they have vents, and when water reaches the level of those vents, they flip open, they trigger, and it actually allows the water through. So why do we want that? It seems kind of weird at first. But what you don't want is you don't want water pressure building on your building. Water weighs a lot. We all know that when we buy a gallon from Stop and Shop or something, right? So a ton of water, and then plus, remember, it has that velocity. It's pushing against your house over and over. So if you don't have the vent, what ultimately happens in a real bad storm is the wall caves in. And now your house is falling into the ocean, which is really what we don't want. So this allows the pressure to be leveled between the outside and the inside. So essentially, now your house is part of the sound. The water's going in and out, and then eventually, as everything recedes, as the storm ends, the water leaves, the vents close, and you're back to normal. So it actually keeps your house from falling apart. So going back to here one more time, we're in the upper right corner. Go ahead. Sorry. So I just wanted to show you the progression of the zones. So that purple on the bottom is the VE zone. Very little, right? Just really when you're way out there. Then the AE zone coastal, so the more stringent AE zone is the yellow area. So you can kind of see, and I can give you the PowerPoint later, but there's maybe 1 or 2 houses kind of in each peninsula that are actually in that coastal AE zone. And you'll see on the map that line of moderate wave action. And zooming in further on us, if you can go one more, sorry. Oh no, go back one second.
Oh.
Go one more. Yep, perfect.
Okay.
So I just wanted to say, okay, what if we were entertaining this building in particular, right? So this building's in the AE zone with a base flood of 13. If we built it today, we'd need the floor of the first floor to be at 14 feet. It looks pretty close to me. I don't think it's that much lower than that. No basement is allowed, obviously. But just as a conscientious homeowner or building owner, that yellow line is really about, it's probably in the back of the parking lot. That yellow line is that recommended line of moderate wave action where they're saying you might want to raise your structure. So if someone was to build a house in this spot today and they're going to invest $4 or $5 million, you might say to them, maybe you should consider spending that money on your investment. Maybe it's another 10% or whatever the costs are, get an engineer to look at it. because if we're that close, why would we take the risk? So it's something to be conscious of, especially here where you can see how this line is kind of everywhere. I was tracing it in PowerPoint, and I'm like, wow, it just keeps going in and out and in and out. So it's something for your clients to really understand. Okay, go ahead and say. This is just my note from before. This applies to river valleys as well. So this is a picture of the Mianus River where Palmer Hill Road comes in on Valley Road. I think we're all familiar with that. So you can see the squiggle on the left is the Mianus River's floodplain. So when it floods in the spring, that's where it comes up to. And it's an AE zone, meaning they have an elevation. They'll tell you, put your house at 26 feet if you're here, if you're at the top. But as you get lower down, the river's descending, so the numbers go down as you get closer to the Long Island Sound. Versus on the right, there's a little creek that actually pours out right behind us. It's parallel to the Mianus River, but because it's such a small creek, it hasn't been documented. It doesn't have any numbers associated with it. So they're telling you it's in an A zone. You should use local guidance. You should look at what your neighbors have. You should ask people where the flood goes. And there are a lot, this goes through that neighborhood behind Starbucks and McDonald's, and there are a lot of houses in that floodplain actually. So those houses would need flood insurance. So, okay, go back one, sorry, I screwed you up. So, all right, I just threw a lot of information at you. Hopefully, I'm from Long Island, I talk quickly, I'm sorry. So if you have any questions, let me know. But what does all this mean for you guys, for your homeowners, and your home purchasers who are looking at a house? So first and foremost, we know flood insurance will be required if the structure's in the A zones or the VE zone, right? That's the flood insurance map from FEMA. So you can start there with your owner and say there's going to be this additional cost. It can be quoted. It's a little unpredictable. You know, after something like Sandy, it can drastically go up. And so it's something to consider. If the house is FEMA compliant, obviously the premiums will be far lower. Significantly lower. I think the textbook is like 60% lower, but our professionals can tell us more there. And you could quote it out as part of your vetting process. Like if you have a house that you're listing, you could try to get quotes for it and say, what is this really going to cost for the next owner? Houses that don't comply are okay. So all of this information is not to scare anybody into, I got to raise my house tomorrow. But flood insurance is a must-have, like we said. And there is a lifetime, I underlined it because that's the number one thing that people miss. It's a lifetime limitation on how much money you can invest in that house before you must make it compliant. So all of this stuff came out, I think, in the mid-90s or late 80s. So starting from that point, Greenwich has a clock, and they say, okay, any money put in, like if you applied for a permit in 2001 on your house to renovate some bathrooms and you spent $100,000, right? And then in 2011, you spent another $100,000. You've now used $200,000 of investment. If your house is worth $1 million, you have a $500,000 limit before you must, by town code, make it compliant. So if you're selling that house to somebody and they say, I really want to add, I don't know, I want to double the size of the house, they're going to go over that 50% very easily, and they're going to now have to make the building compliant. So it's a really important thing to clarify for people. Your house is okay, but what you can't do is double the cost of it. If you double the cost of it and the town, you know, so of course, again, people work around that in ways that I don't know, but bottom line is it's very obvious when you're spending more than 50% of the value on a house, and the town's not going to play around with that. So they're going to say to you, all right, fine, you can have that addition, but you're raising the house up to that number that we gave you. So here's how, just again for the code wonks, how they define a substantial improvement. Any repairs, reconstruction, or alteration that equals or exceeds 50%.
And that 50% is based on the value?
They say market value. So again, there's obviously wiggle room there. It's not a,
Okay.
there's no, like no one's here saying.
So the clock didn't start 10 years ago?
Right, at that value, right.
It
So,
starts when you decide to do the renovation?
right, and it'll change over time, right? Like maybe the market value now is more than it was then.
Yeah.
Right, so, it's a very gray area. I mean, I think that's done on purpose.
Howard, I have a question. If you decide to raise the house, would that minimize your insurance? Or
Yes.
would that just
Significantly.
It would wipe it out. It would just minimize it.
There's usually some amount because you can expect some damage just from wind and the moving of the water.
What if you, rather than make improvements to the house, that you improve the land?
That I don't know, but I don't believe that would count because everything is based on the structure.
Okay, so then
Yeah.
that's a great idea, right? If
Yeah.
if you make the house, like impervious to a flood or some, you know, then you, reserve.
You put a pool in or something, yeah.
Or put like a bunker, kind of.
Oh.
Not that I know of any house in particular that this would apply to, but if you do make improvements to the land rather than the house, that's a good thing.
Should be, yes. Yeah, you can try to divert the water away, but what they don't want you to do, and this goes into how I said there's every other department, like we're only focused on one department right now, really, which is FEMA, but there's also other regulations, like zoning won't let you raise the whole grade of your lot more than X amount because they don't want people building pyramids out of their property, right? So there's all those other factors.
There's an X amount.
Yes. Yeah.
Oh, did you want this?
Yeah, so this just, okay, so there's one other thing. The charge here was what are the factors affecting coastal properties that are different. So really it's 95% FEMA, and then there's something called coastal area management. You guys probably don't have to worry about that. It's really part of the permitting process. It would go with zoning and any of the other sort of, on my plate as the architect, you know, what needs to be permitted. So the state has a requirement that any property within 1,000 feet of the water, which they define as the Long Island Sound and anything that's tidal, will be subject to an additional review called coastal area management. So that obviously impacts a lot more properties than a flood zone because you could be on a giant hill, but if you're closer than 1,000 feet to the water, you're getting CAM. Now, CAM is not really something to worry about for most things. So most of the time it's what's called an administrative review, which means I file the plans for the client and it goes to zoning, and then zoning sends it over to the coastal people. They take a look, looks great, you're not impacting the waterfront, you're not spilling your water into the ocean, you're not moving sand, that's keeping our coastline safe, you're good. But if let's say you had a really awesome owner, like some of those $25, $30 million properties that are way out on these peninsulas that are for sale right now, let's say someone said, oh, I want to buy that house and I want to install a 150-foot dock for my 200-foot yacht or whatever. I guess it'd have to be longer than the yacht. So, but anyway, if you want to actually start touching the ocean, if you want to put a jetty up, if you want to move beach, if you want to put a seawall, that's going to be a much bigger review. That's going to trigger the state to look at it. It's going to require probably the Army Corps of Engineers and much bigger agencies than just our town of Greenwich, right? So I only threw this in here just to say it's part of it, but obviously if you have a client looking to do something like that, there's going to be a bigger mushroom to work with there. So I said here most can be reviewed administratively. They pretty much say if you're building a new house within 100 feet of the actual shoreline, you can bet that you're going to be going for that big review with the state. And then, since you guys asked about zoning, I just wanted to point out there's no difference in these zones. So these RA1, RA2, all the zones that you're used to throughout Greenwich, the whole town, are the same zones here. So your coverage is the same, your setbacks are the same, all that kind of stuff. It's just they happen to be by the waterfront, but there's no added factors in zoning. So again, I didn't talk much about myself, but if you have any questions, let me know, and I'll be around afterwards. Thank you for your time.
All right, so we're just gonna put these chairs here, and we'll invite our other guests, who are People's Bank and People's Bank Insurance. How would you? I guess People's United Insurance. Sorry about that.
Jen, do you want to go or do you?
Yeah, I think I will just go quickly because this focus is really about flood. We can educate you guys about flood. So my purpose is really just kind of tell you quickly about myself because I cover southern Fairfield County. I'm a mortgage loan officer. By the way, Jen is my last name. You see my business card? That is correct because I go by Jen. Jen is easier for everybody to remember, so I'm just simply Jen from People's United Bank. You can call my first name, but you don't have to. Okay? So I've been originally since 1998. I started with the community bank and became a bank and trust. So I'm accustomed to giving the hands-on service, the attention to detail, and also access to management. That was extremely important. And of course, McCain Bank and Trust no longer exists. And when I started to look for another place that was a fit for my goal and my vision of how to serve clients, People's United Bank was the really only choice that I ever considered. We are headquartered in Bridgeport, so I make a lot of runs there. I talk to underwriters, I speak with processors. We discuss face-to-face the challenging issues instead of trying to communicate by email. So, and management's there, our decision makers are there. Anyway, quickly about our programs. Anna is our local branch manager, so we partnered together. If you go into the branch, she can locate me, can call me, I can locate her. So we are definitely a good team here to support each other. Do you want to talk about home equity? Or do you want to talk about it?
So really quickly, you might have buyers that want to renovate their property before they sell it. We can do home equity loans on properties for sale now. So that would entail that they would work with me to get the financing in place, they would do what they need to do, and then they would pay us back when the home is sold. That's one thing we can do with a home equity. We can bridge loan them to another house. There's no such thing as a bridge loan anymore, so we use the home equity as a way to make a purchase of another home by tapping into the equity of the home that's for sale. So those are things that we can do to help. Anyone needs major renovations, anybody doesn't want to sell their home, but they want to raise it or, do some of these things. We can help with that kind of financing. So that would be something that you'd work through me. And if it requires that they're purchasing or they're doing large scale construction, then we bring in Jen. Okay.
So the good thing about in talking to other agents, the home equity, the fact that we allow the house to be listed while we provide financing, whether it's for their bridge loan, whether for fixing things around houses that has issues, it really helps to maintain your momentum to keep the house on the market, be able to have active inquiries on the property versus a lot of banks who require to take it off the market before they would even consider doing a home equity. So the other things that since we have, I think a lot of agents, not just locally here in Greenwich, Stanford, so you have a very diverse client, which is really kind of nice. And at People's, we do the same. We have pre-approval programs that is actually underwritten by underwriters, not by me. I do pre-qualification, but we take pre-approvals very seriously. Loan officers never issue pre-approval. It always comes from underwriting, so they actually do the full underwrite before they issue a pre-approval letter. So granted, it takes us a little longer to get that because we do that full underwrite. We require all the documentation that we usually come with an application. We also provide first-time homebuyer programs. We partner with the HDF in Stanford. I think a lot of you guys probably know about them. So to assist them with a first-time home buyer with down payment, with closing cost assistance. People also have our own program, People's United Bank, so we call it PAM, short for PAM. And those are all first-time home buyer programs. The other, I think, niche product we have is the construction to perm. So we talked about a lot of constructions here, whether it's renovation, whether it's construction from ground up, how for you to utilize this program. I think, often you think that is you have to own the property to be able to renovate, to be able to build, but this can be also a selling feature as well because you can combine it as a sales and as a single closing. So if your client finds a piece of land, maybe it's going to be a knockdown, maybe it's going to be a big renovation. It does take a little patience because the construction loan program requires the plans and specs. So I think it's a good networking with builders that you have people that you can go to right away. It's like, hey, I have a client interested in this property. Has not been updated since the 1930s. It needs a whole new kitchen and it needs a whole new bathroom, but it's got great bones. You all recognize great bones, right? So really cosmetic, I think things that can be very easily improved and they will absolutely love the house and put their touch on it. And that's what this program comes in. we will use all those plans and specs of budget, and we appraise based on the as complete. So for the comps that we're using for the appraisal is gonna be based on after what the finish, not the current value. And what Anna mentioned earlier about the home equity, you need to have existing equity. But oftentimes when you buy a house, you don't have that existing equity, right? You just bought it, you have not built that equity, and construction will allow us to use on the future value. And that's really the key. When you talk to Anna or myself, we really determine what is the best product for your client, what is the most suitable, most efficient, and economical. And that's what we're here to advise. Construction loans is based on funding if you're purchasing, since most of you are selling and helping clients buy homes, you will have the initial disbursement as a purchase because you have to be able to own the property before you can start renovating. So the first part of the construction funding goes toward acquisition of either land or the property. And from that point on, the bank will disperse based on completion, from each milestone you complete, and you have an agreement, usually the client with the builder in terms of disbursement schedule, and we work with the builder and set up the appropriate disbursement schedule, try to mirror that, but we are very flexible. So there's a lot of details to it, but I think my advice really is in talking to us, get this out of the way. Our time is very valuable. We want to get it right the first time. So in helping your clients succeed, it saves you time and saves you, I think, really to direct them in the right direction, whether this is the right thing for them, and that kind of helps you make the sale. Do you have any questions? I think we can talk about that separately. Yes, go ahead.
In the case of maybe a more competitive bidding situation, if you're up against other people bidding on the same house, you can't wait for plans and specs. Is there some sort of a pre-approval or an idea that the bank can give the client? Yeah, we'll maybe keep the plans and specs as a stipulation as opposed to starting when you have that. So how can somebody buy a house when there's other people bidding, not sure if they're going to get the loan that they want to get?
Right. So it's kind of two separate questions in a way. So you're bidding on a house, you're bidding the house as is, right? So maybe your client intends to renovate, but the other buyer does not. So to the seller, you're just bidding on that price. If we need to issue a pre-approval on the construction, it's a kind of a shoot in the dark because it's a very the details of the budget can be subject to a wide range, right? It can be in minimal. You can refinish the same kitchen for $30,000. You can refinish it for $100,000. And in order for underwriting to actually pre-approval loan, they need to factor in: do you have the sufficient reserves? Do you have all these numbers? So I think I normally run a very detailed pre-qualification based on those situations. With an estimate, it's like, okay, $50, or it's not $50, $500 per square footage, and using those numbers and say, okay, I do a full underwrite. I look at all your reserves, your income, to make sure what is the limit you can qualify for, and you still have sufficient reserves. So you have the budget to be able to sustain throughout the construction. And I think with that, combined with the pre-approval, which is a purchase pre-approval, I think it will give the client enough comfort level. Now remember, this appraisal involves, there's a lot of things that we really won't be able to put our hands on precisely. I mean, that's the nature of the renovation, right? Because you really don't know until you know exactly what you're building. But I think my suggestion would be to proceed with a pre-approval as a purchase pre-approval, so you can compete on the bid for the purchase. And at the same time, we can provide a very detailed, high-level pre-qualification based on the available budget and plans that we have. And I think you look at the benefits with the pros and cons. The benefit of combining purchase with the construction, as long as, of course, the seller is willing to, work with the buyer, because it will take some time probably to get the information together. It's really kind of a foolproof, 100% assurance for the buyer to know they can get funding, because the appraisal appraises based on the plans and specs. You have all the funds. It's a sure thing. So you're not buying a house and then realizing you're sure fund that you cannot do what you want to do.
Thank you.
So back to flood insurance.
Good morning, everyone. So the fun part, insurance, right? So I'm Stephen Montier. I'm with People's United Insurance Agency. Give you guys a little background on the agency. We're a top 60 agency in the country, most of it being commercial insurance. So we have 3 arms. It's commercial, personal, which I specialize in, and life and employee benefits. So who likes to pay for insurance? No one, right? Until you have a claim, then you're happy you paid for it, right? So flood insurance is one of the few lines of personal insurance that is relatively easy. As Howard mentioned, the pricing is pretty much set in stone through FEMA and their NFIP, which is the National Flood Insurance Policy or Program. So it doesn't matter if you're in an AE zone, VE zone, it's pretty much predetermined, right? How you get better pricing could be if you get an elevation certificate, right? So you hire someone like Howard, they come in, they measure how far you are above that base elevation level, right? So for instance, I had someone the other day in New Canaan. We quoted her flood. She was going to pay somewhere around $8,000 for the year just in flood insurance. She went out, did an elevation certificate. It cost her less than $1,000, and we brought that price down to under $4,000. Okay, so to pay $700, even $1,000, $2,000 out of pocket to get this elevation certificate, you're going to save in the long run, right? There's also pockets within these flood zones that maybe naturally are above that level, and you could actually apply to get waived, right? And not necessarily need flood insurance. I'm gonna say the odds of that happening are probably slim, but it does happen, right? So flood insurance isn't necessarily required unless you have a mortgage, right? Your mortgage lender is going to require it the same way they're going to require typical homeowners insurance, right? So they just want to make sure that that's in place. If there's no mortgage in place and the client or the insured is willing to take on the risk themselves, they can certainly go without flood insurance. It isn't necessarily a requirement for them. But flood insurance. So, what's amazing about flood insurance is it has limits, right? Usually with your homeowner's insurance, if you own a $10 million house, or what the carrier considers to be $10 million rebuild, right? They'll insure the property for $10 million, or the house for the dwelling. With flood insurance, it's capped. So the building's capped at $250,000, and your personal contents is capped at $100,000. Okay, you could play with those numbers. So you could absolutely go less. There's all types of deductibles. There's different ways to play with the premiums. But it doesn't matter, again, if you have this house that's 200, you'll get the full 250,000 on the building, 100,000 on the contents. The price is the price. It doesn't matter what flood insurance carrier you go to. If it's the Hartford, if it's National General, doesn't matter. The price is the price. The only way to affect that, again, is to get an elevation certificate, and that's how you can play with it that way. Now, most waterfront properties are worth well more than $250,000, right? So you can go for excess flood insurance. As you can imagine, it isn't necessarily cheap. It actually goes to the private market. So that first $250,000 is set by FEMA. It's a set price. There's no playing around with premium. Once you go past that and you want excess flood, right? Then at that point it goes to the private sector, and then you can absolutely get that quoted with different carriers to see if you could save money that way. Okay. What I also find amazing about flood insurance, and in my opinion, it's wrong, but your basement isn't covered. So if you have a finished basement, any cosmetics down there is absolutely not covered. So I guess FEMA considers a basement with all the walls, right, the outside being under ground level. Okay, so unfortunately the basement wouldn't be covered. So I always find that to be interesting, because I would assume usually that's the first thing to flood, right? So
So I'm
go ahead.
sorry, I have
Yes.
a quick question. So most of the houses we have here have the mechanicals in the basement.
Yep.
So does that mean that none of that is insured?
So cosmetically, so the walls, the carpet, none
Okay.
of that would be. The mechanicals would.
Okay.
That's, you have to run the house. Yes.
What's involved with an elevation certificate?
So you would hire an architect, surveyor to come out, and they just measure
The height?
the height above the
Yeah,
wall.
probably a surveyor, I think, or engineer,
Yeah.
where they can
Exactly.
say it's 17.5 feet, so you're good. Or,
Exactly.
Yeah.
And then we would submit that elevation certificate along with the application, and then it helps in terms of premium.
Does the amount of a deductible dramatically affect the cost? For example, can you use a $20,000 deductible?
So yes, you absolutely can. If you have a mortgage on the property,
We have no mortgages.
okay. So if you don't have a mortgage, you can absolutely take any deductible you'd
What's
like.
that? You're laughing at me for.
If there is a mortgage, the lender will probably put a cap. Usually it's about $10,000 for the deductible. The max you could take as a deductible.
But 20, you can go 20 if you don't have a mortgage.
Absolutely.
Now, the other thing is, if it's owner occupied, it's significantly cheaper than if it's a rental, correct?
Correct. But if you have a rental, let's say you would really only be insuring the home and you would care less about the personal contents.
Right.
You would still have some personal contents.
But isn't the amount you pay significantly different between a rental and if you live in it?
It would be different, but it's going to come down to what you're insuring. So as an owner occupied, not only are you going to insure the dwelling, the structure itself, but you're also going to insure your personal contents, if you like. Whereas if you're a landlord, you're really only insuring probably the structure, and you'll have a small amount for personal property, for the mechanicals, for appliances, for maybe have a.
Now, I'm gonna take your business, but we've shopped the hell out of this thing.
Sure.
And we have found that, and look, we're too old to tell fibs, I am anyway, that if it's owner occupied, the price is 1/4 of what it would be if we rent the property.
So a lot.
You know what, I don't want to take, give me your business card, please.
Sure.
And
Absolutely.
we can talk about it. okay?
Absolutely.
Maybe you can insure our properties.
I'd be more than glad to take a look.
Miss out.
Are the deductible amounts, like we're in a flood zone, FEMA quoted the insurance premium being, I think, $3,800. But if I took a $10,000 deductible, it would cut $1,000 off of that $3,800 price. I'm paying $2,700 off of a $3,800. So
Sure. I don't know if it's black and white that it'll cut off 1,000 or so, but there are different deductibles. It'll be a different premium, without a doubt.
Do you have a write-up concerning this, or it's just more one-on-one?
What do you
Do
mean?
you have a printout? Oh.
I should have never said that. Fred loves his printout.
Fred loves paper.
It's very personalized.
He can do it. He can print it out for you once he
Absolutely.
meets with you.
More than glad. And then even on the proposal, you'll see the different deductibles and what it will be for a premium. I could absolutely.
Potentially put it in a laminated sheet like Howard did.
Exactly.
Yes.
So I will touch on two other things though. So Howard mentioned flood zone X, right? So flood zone isn't necessarily required in flood zone X. Okay. Now, I came across this the other day. We were quoting someone in Milford, so they're right next to Walnut Beach, right? And they're 3 houses away from AE. Okay. So my recommendation to them was to absolutely buy flood insurance. So FEMA updates their maps every 5 years, right? So who's to say that in 5 years from now that that's not AE, right? So the benefits of buying it now is you're locked in at that Zone X price, okay? So if you buy it today, let's just say if you're an X, so let's say you're in flood zone X and it costs, I don't know, $700 to insure your property for flood. In 5 years, if it were to become AE, you're still in that, you're still grandfathered into X. Okay?
So for what, for a year?
Forever. As long as that policy is active.
For that owner.
So, that was going to be my second point.
Transferable.
You can absolutely transfer the home, the flood policy to the next homeowner. Okay? So I have a buddy of mine in Stratford that the previous homeowner bought it with X. It's now AE, and he's still having X, and it was transferred to him. He spends less than $1,000 on it. He would spend more than $4,000 if it wasn't transferred.
It's a huge savings. I've come across it with several properties, in Connecticut and Hamptons, and it's staggering the difference between the premium.
Absolutely.
So I think if you know if you're representing the seller, or you're representing a buyer, find out if it's currently has an existing policy, and that could be a really beneficial tool too.
Absolutely. And then I know in the Smart MLS, there's the tab there for the flood report, right? So, take a look into that, because if you're very close to those high risk flood zones, again, I would highly recommend it.
Sorry, I didn't want to cut into you, but to go along with that, on that sheet that you have from me, it shows you how to look at the map. It's msc.fema.gov.
Correct.
And you can, even just as the realtor, where you can show it to a homeowner and say, look, here's where you are on the map.
Mm-hmm.
It's very easy to do. Just put an address in.
Is it transferable though between different insurance providers, or is it only transferable between the same provider? Like, if it's X and it went into AE, could someone else take it with a different insurance policy holder, or does it have to be the same?
Yeah, so let's say I own a
Same
house,
policy.
I bought it
Oh,
when
okay.
it was at X,
Yeah.
We could transfer it to yourself.
Right.
But
if
it
you're
has to
buy-
be with People's
But does it have to be
United.
with People's
Yeah.
United though?
Oh,
or
the
could it be a
agency
different
itself? No,
agency?
it's as long as it's with that carrier, because the
Oh,
carrier
okay.
holds on to
Yeah. Okay.
to the actual
The
policy.
actual insurer.
The agent is
Oh,
really
okay.
just servicing that particular account. Yes,
Yeah, okay.
exactly.
You say they rewrite the maps every 5 years.
Every 5 years.
When was the last time they did it?
I
I think it was 2 years ago. I'm not sure.
Okay.
It was recent.
It was
I
recent.
thought it
I
was
know
recent,
that.
yeah, because I've
That-
had
that-
clients say, I was not in a flood zone.
Exactly. Exactly.
Now you are.
Absolutely.
Sorry.
Let me ask you this question. You
Yes.
said that FEMA determines the rates,
Mhm.
right? So if one year you're in flood zone X and next year you're in a different flood zone, wouldn't FEMA also determine how much you're paying for your insurance?
Correct. But when you're in X, you don't need flood insurance, right? So I'll give you a prime example. We came across it
So
the other
when
day.
they said that you have to have minimum of whatever $5,000 insurance, how are you saying that it's transferable if you're paying for an X policy?
So if you had the flood policy in place, then you could transfer it. If you never had it, then you can't transfer it. Right?
But if they said the minimum of how much you're paying, or whatever the rate you're paying.
Yep.
How wouldn't that change from year to year?
So I mean, just like any other policy, the rates could typically go up, but it wouldn't be as drastic. So I'll give you an example. So we had someone in Newtown actually. They were in flood zone X their whole life, right? Since they've owned this property. The new maps came out. People's Bank got wind of it, and they actually sent them a letter saying, hey, look, you have X amount of days to buy flood insurance, or we're going to force place flood insurance for you. So, again, maps are always changing, but even though they determine the premiums, right, it's still transferable. So even if it's AE, you can still transfer it to someone else, right? But if you're an X, you're grandfathered in. Okay, so if I bought the house and I just happen to buy flood insurance at Zone X, it's a certain price. But in 5 years from now, when they remap it, and now I'm in AE, I'm still getting premiums based on X because I was grandfathered in. And then I could transfer it to you if you were the one to buy the property.
The reason I asked it, how often do they, because you're gonna technically time it correctly, right? If you're in the X zone, you could.
Always
insurance
looking
for
to get
4 years.
away.
And then if you want to go in the flood zone, I would drop
So,
insurance for 4
actually,
years.
that reminds me, so, there's certain situations when you're going to buy flood insurance in which it becomes active right away. So let's just say you're in Florida, you don't have flood insurance. I'm just using Florida as an example. Let's use Fairfield. Let's use Fairfield. So Fairfield, let's say you don't have flood insurance, but we get wind that there's a big storm coming our way, right? So a lot of people scramble to go get flood insurance, right? And they know that's happening, so they actually give you a 30-day window in which you're paying for it, but it's not active, to avoid situations like that. The only time it becomes active right away is if it's transferred or if you're closing.
Yeah.
Exactly. Or refinance.
So close quickly.
I think it's really going back to the example of somebody being maybe 3 houses outside of a particular flood zone. What advice would you give us to recommend to our clients that if they aren't technically in a flood zone but might be near one, what advice should we be giving them? Is it 3 houses out? Is it a quarter of a mile?
It's hard to say. It really is, because the same way the flood maps could go out, they could come in, right? Mm-hmm. So it's really hard to say, but if you're that close, I
just get it.
I would highly recommend
Isn't
just
there
get
like a $400 policy that you can get that's not quite, flood insurance for, Sandy?
Sure. I mean, again, you could get however much of a limit that you want on your property, right? They have a cap of $250,000 on the dwelling, but you could get $50,000. There's $100,000 in contents, but you could get 10, 20, right? It really comes down to how you value it. I mean, I wrote one the other day, and they just insured the home. They didn't do anything for contents, and they're living in it. So if anything were to happen in terms of flood, the home would be protected, but that Samsung TV on the wall necessarily wouldn't be.
And how much? What do the costs look like for excess flood insurance? Because $100,000 in this area.
Yeah, nothing.
It's not, absolutely. So again, that's going into the private sector of flood insurance. So each carrier is going to be a little different. It's just like your typical homeowners now. You're going to have carriers that are super aggressive at times. It's a very cyclical business. So who's very hot and price conscious today, maybe in 2-3 years are nowhere close to being competitive. So if they're in the excess flood market, then they could continuously get that quoted. The basic flood insurance standard through an FIP is, the rates are the rates.
What is the typical variance between each flood zone?
What's that?
What is the typical
So just like Howard said, VEs are going to be very expensive. AEs.
But what is the average variance?
It depends. It really depends on
if it's the same coverage.
Between AE and VE.
Right. If you're insuring for the same amount.
Again, it's very hard because even though you're an AE or VE, you and your neighbor could have completely different premiums. Because as you saw with Howard's example, you have some houses that are all the way up here, and then you got some that are right on the ground level.
Depends on structure.
It depends on the structure. There's a lot of factors that go into it. Usually when, let's say there is no elevation certificate, they paint worst picture, right? They give you the worst case scenario. They always give you the highest premium possible. So that's why elevation certificates are very important. But between AE and VE, it really depends. VE is obviously going to be more expensive, just because of the nature of the way it is. But it's hard to say because you could have 4 houses in a row that are all AE, and some are 10,000, some are 5, some are 6. It really, it's hard to say again because it's all determined by FEMA.
Question for you. I mean, down the street here, if there's a $10 million house in an AE area, and you have provided them with a mortgage, FEMA's capping flood insurance at $250. How do you insist?
Provided by the property owner.
This is through the private?
Private.
Well, the
Alright,
bank
so
would
you-
only require 250.
Right. The rest is,
Exactly.
they
Alright,
use
so you can still get comfortable with only, so they don't go with private? You
If
still
they
do
don't,
what?
they
You
don't.
only go
Here-
FEMA?
Yeah.
Here's what I suggest, if you have someone who's looking to list a property, right? Now, you guys know what kinds of things buyers are looking for, right? So you can be consultative in your approach with the person who's looking to sell, and you can make certain recommendations. I'd like you to talk to Steve, let him review your current policy coverage, let him see where you are in the flood zone, let him make some recommendations. He'll make those recommendations before the property's listed, okay? If you have someone who hasn't renovated in a while and you know a buyer's gonna walk in, they're gonna say, forget it, you send them to me, we take a look, we see if we can lend some money to get the house ready to be sold. So on the listing side, I think it makes sense to bring Steve and myself in as soon as possible. When you have the buyer, then the buyer, would go to me and Jen. And then we would pre-approve them before they buy anything. So what we're trying to do is streamline the process, let them know their options, let them know if they need flood insurance, and if they don't, why would you want to have it? And that will increase the chance of selling that property, right? Maybe even to one of your own buyers. So you get to keep both the sale and the purchase within the same company, right? That's what we're trying to facilitate.
I think to answer your question, the bank will only require the standard flood insurance. They wouldn't ask that they go to the excess market to cover the remaining 9.75 million on that property.
So who's responsible for that?
The homeowner.
But it's a choice.
So your
Yeah,
homeowner
it's
is
a
not
choice.
covered that.
Yeah.
Homeowners usually doesn't.
So no, great question. So flood is typically not covered by your homeowner's insurance.
Right.
Okay? You could get riders, right? And endorsements that will cover certain things. But there's something called water backup that your homeowner typically takes care of, right? So that's if sewer lines back up into your house, septic tank, septic lines back up into the house. But that's that's water coming through the piping into the house. Burst pipes, right? There's ways that water is covered with your homeowners, but not flood. Flood will never be covered by any homeowners, ever. Flood is considered just a sudden rise of water that enters the property.
Right.
Could there be an argument on if wind takes the house
So
down?
I'll give you an example. Let's say,
I'd be like,
yeah, no, that's a great question. Let's say the wind takes off this roof, right, and it rains into the house, right? That would be covered by your homeowner's insurance. Okay. Now, if it rained and the creek down the street flooded and now it came into your property, that would not be covered.
And look at the source of the flooding. Right?
Exactly. And you're probably not going to be the only person in that area that is dealing with it. So, a lot of the insurance carriers kind of speak with each other and know where a lot of hazards and risks are starting to happen. So.
Question, I probably already know the answer to this, but if you have a flood that damages your property and it also damages the land, would any of that flood insurance cover like regrading land or
No.
just the house?
Building, structure, and contents only. Nothing with the land. No pools, no patios, no fences, no stone walls.
Even the seawall.
Nothing. No.
Interesting.
Only the structure, the building itself, and your personal contents.
That's it, right? We're all moving inland.
Yeah, exactly.
Not the Catskills.
Yeah, right.
So,
Alright.
any other
We
questions?
good?
Thank you.
Awesome. Thank you guys.
Thank you guys.
So I just want to thank you all for coming. As a reminder, Catherine and I are always here. Catherine, there's always one of us here during the week for any kind of walk-in stuff you need. Just shoot us a text, an email, give us a call here. There is no walk-in Google Help next week. Both of us have to do something for the office. But it will be next month. So I've rescheduled it on the Google Calendar if you have access. If not, just go into your Google Calendar settings and request access to kinardrealtygroup@gmail.com, and then I'll just approve you all. So if anybody has any questions, I'll be downstairs for another hour or so, or you can give me a call on my cell phone.
Awesome.
Thank you.